Shares in US bank Goldman Sachs jumped 13% last week after Donald Trump won the US election. Lower taxes, less regulation, and an appetite for deals has got investors excited about bank stocks again, with Goldman hitting a new record high. At the current price, Goldman Sachs now has a market value of $198 billion. The company has reported $49 billion of revenue over the last 12 months, $12 billion of net income, and $34 earnings per share. So Goldman Sachs is now valued at 4 times revenue and roughly 17 times earnings. The company has grown its assets under supervision to $3.1 trillion and now trades at a price to tangible book value of 1.9. If there's one thing the new President Donald Trump likes, it's making deals, and as the world's #1 firm for mergers, acquisitions and stock offerings, Goldman Sachs stands to benefit. M&A volume has been down in recent years following higher interest rates, regulations and antitrust policy, but deals are expected to rebound in 2025 as those policies are reversed. According to the Financial Times, a 25% rebound in M&A volumes could lead to $4 trillion of additional activity. Since deals make up around 20% of Goldman's revenue, the company could see a solid increase in profits. In 2021, for example, a booming deals market helped Goldman's revenue surge by 42%, with net income hitting a record $21.6 billion. Analysts think that Goldman's earnings could jump 15 to 20% next year. In that scenario, Goldman would be earning up to $44 a share, and a similar PE multiple would then take the stock up to $750, an upside of 27% before dividends. However, 2021 is an interesting example because despite hitting record earnings that year, Goldman's PE ratio started to decline sharply, and the valuation went under 6 times earnings in 2022, and it was a similar story for Goldman's price to tangible book value. This all happened because inflation started to increase and investors understood that Goldman's 2021 peak earnings were unsustainable, and with Goldman's valuation now back to record levels, it's possible that a similar scenario could play out. Donald Trump's presidency looks like a huge win in the short term, but longer term the picture is unclear. Aggressive policies from Trump could bring back inflation, distort bond markets, or cause volatility in the economy. Right now, we still don't know what Trump's policies actually look like, and that uncertainty may be a problem for some deal makers. The main issue is that the whole stock market right now is pricing in very little risk, and that is usually a time to be cautious. So even if Goldman Sachs achieves a bumpy year next year, the risk to reward in the stock isn't attractive enough for investors. But these are my personal opinions, not financial advice, and I hold no position in Goldman Sachs. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.